Hello, everybody. We're going to do our best not to keep you too long away from lunch, but we have a very exciting panel ahead of us, and there's quite a lot of us on stage here. So without further ado, my name is Erwin Voloder. I'm the head of policy at the European Blockchain Association. We're one of the large EU trade associations representing the interests of our industry broadly across Europe and globally. And I'm going to just bring it right to the panelists to give a warm round of introductions about themselves, maybe say a few words before we dive right into the questions.
Good afternoon, all. Ready for lunch? Yep, nice to meet you all. Here from Unit Network, we've started developing the next economy, basically. It's going to do a lot of transformation in the pyramid. So far, we've been talking about the top of the pyramid with the regulations. These regulations coming from everywhere. We're actually building out the next version of economies for various things. But I'm actually leading the development team. So if anybody got engineering questions on blockchain development and decentralization, please come and talk to me or ask me questions. Yeah, thank you.
Okay, hola Barcelona. I am Patrick Hennes. I am from PRIVATBANK in Luxembourg. And so I am, I think, the only traditional banker here in the round. But I'm not only a traditional banker. I've been for 26 years in Luxembourg in investment industry. But I'm also for a decade in DeFi and in blockchain. I was the project manager of the first blockchain initiative in Luxembourg to tokenize investment funds. And I'm advocating bridging TradFi and DeFi already for many years. And I don't only talk about it, I live it really with my team. I have half of my team has nearly 100 years of experience in traditional investment funds. And half of my team are rookies, and we are doing tokenization as well as normal UCITS funds every day.
Okay, thank you. First of all, we have banking ladies here as well on the panel, and from BNP Paribas.
Oh, really?
And
sorry for this, Verena.
And saying that, no, I have been in banking 15 plus years, getting bored of not being innovative enough. Moved to fintech banking and later on into VC, blockchain fund, PE before founding Assetera. Assetera is, as you could see already at the beginning, an EU-regulated trading platform, especially for securities on chain. And we basically have our headquarters in Austria, Vienna, and also regulated in Vienna from the Austrian Financial Market Authority on the MiFID as well as on the MiCA.
Hi, I'm Tobias. I'm co-CEO of Stocker, and for you who don't know, we are doing tokenization actually since 2018. We have right now in real-world assets around 1.8 billion asset tokenized on our platform, and they're really tokenized, so you can really trade them peer-to-peer in a closed environment with whitelisting contracts. We have built like this company in 2018 already, and we have like seen like a long journey on the way, and I think we will share a little bit on this panel also how like the infrastructure and where we see actually the infrastructure going in the future.
Hello, my name is Verena. Thanks for having me. I work for BNP Paribas Security Services. So what I can bring to this panel is actually the point of view of a large custodian, the post-trade side. And on our side, we are actually dealing with tokenized securities, tokenized real-world assets. We are not touching on cryptocurrencies, but we were very active in the ECB trials, so looking closely at digital cash, also being involved in several bond issuances in Europe, being about to extend the scope on that part, and also working on funds tokenization. And I think if I could give like one input related to the topic of our panel today, what I see as the main bottleneck when it comes to the tokenized asset market is really fragmentation today. And on the flip side, I think consolidation and collaboration could really help us there to come to scale. But we will see that in the panel, I would say.
Wonderful, thank you for that. And Paul, maybe we start with you. So, you guys are building the tokenization infrastructure kind of at the infrastructure level. What sort of issuances, specific use cases are you actually seeing crop up in terms of the cross-section with the work you're doing? And could you give us a snapshot maybe of how your platform is enabling those issuance rails in practice?
Hi, yep, got the right microphone now. Yes, what we're doing, we are developing an opportunity for everybody, not just for the few in the financial institutions and the ones that want to maybe tie into particular jurisdictions, but people who need now empowerment to raise capital, whether it be for community, for personal, for business. And what we have is an engine, really, that's going to be like, we've got Bitcoin, we've had Bitcoin. Bitcoin does transfer of funds, it does saving of funds. Ethereum empowered people with the contracts, but it's only applications. What we do now is like take that one step further with economies. So people can actually build their own economies around their own industries, around their own cities, around their own business types. And individuals can also be involved in those economies. They can have their own economies, and people can actually, say, subscribe to their economies. So what we were doing is basically making what Vitalik used to talk about as the Swiss master knife. So we're going a bit further than that by making a whole kitchen. And that kitchen is built with components or tools that anybody can pick and choose from to build out on the bottom level. So take something from an idea through to the equivalent of the old-fashioned IPO. So this is what Unit is doing. And we have a mainnet blockchain now, which is pretty solid, been running for a year. And we're starting really to get people more on board. I mean, most of the people in the world are still not holding wallets. And that is like a lot more of a problem or an issue or a pull factor for this whole industry than like taking care of, like, say, the financial institutions that were actually being basically possibly phased out eventually. Everything will be fragmented and everyone will have their own power, especially with AI coming. Yeah. So maybe I'm rambling on a little bit, but I'll talk a little bit more later. Yeah, thank you.
Patrick, you know, as a major bank that's playing in this space, and you guys are on the forefront of building some of these products, how are you approaching custody, for example? You know, how are you thinking about the segregation of client assets, key management, regulatory capital treatment? What's that look like in your day-to-day?
Yeah, this is in fact one of my favorite topics because for me this segregation, everything is built up, in fact, what I say, the digital custody layer. Okay, and as we are in a traditional financial institution, this layer is the most important for us because here is regulation in play, real governance, compliance, and everything. So here we are looking to an institutional grade digital custody layer, which is a topic very close to my heart. And yeah, you can ask now what it is. What is really institutional grade? And institutional grade is not only wearing a suit, okay? So we have here on the panel also an institutional grade guy like Tobias. He's not wearing a suit. So this is not institutional grade. But what is it really? And I can start with an anecdote on this. I am scanning a lot the market and the providers in this area, digital asset, wallets, things like that. So a lot of companies are presented to me, and then I make a full due diligence on them or a quick check, whatever. And I had already a funny situation this year. So I received a name of a company. They wanted to that I introduced them to the bank. And I said, okay, guys, give me some information. And could you send me your organizational chart? Okay. And this is not a joke now. They sent me a photo from the Paris blockchain week on a party. And then they said, this is the team. So this is not, for me, institutional grade. Okay. But this is an anecdote. What is institutional grade really? Is not the product itself that I'm looking at the first glance, okay? I'm looking also at the company, really in detail. So we are a traditional institution, and all the providers that we select, they pass through the same process. It's a due diligence process, it's a risk-based approach. So we have a look at what is the corporate governance. Do they have auditable financial statements? what is cybersecurity on their end? Do they have already a track record or a revenue record? So even if you are a startup company, we are checking this, okay? So this is for us institutional grade. And then once they pass this first test, then we will have a deeper look into the product itself and the solution that they provide to us.
Good. Thomas, you guys are bringing fully regulated digital asset exchange capabilities to the market over at Assetera. What are the key technical and legal challenges of supporting tokenized securities for you? You know, how do you reconcile, for example, blockchain-based settlement with CSD-style compliance?
Let me first start with a statement that the regulatory clarity on the crypto side, meaning MiCA, certainly also helps to better understand what are actually securities on-chain and what law we have in Europe, a law for securities, which is MiFID, which is actually currently applying. We also have a DLT pilot regime, which just started, but there is no traction yet. On the other side, we see the legal challenges actually at the beginning of a project. Like Patrick already mentioned, you need to do a due diligence of the project, you need to do a KYB of your client. Actually, you also have to have a product governance. You need to read the white paper, which is now under MiCA, similar to what is actually already done under the MiFID. And if issuers come to you, they, apart from not having all the KYB information, they even ask you how to design a token. I have no idea how to create a financial instrument. And that's actually already the beginning. And if you want to get private market assets on-chain, that's the very first thing we have to actually scale or kind of clarify. And the legal companies also actually, I don't see any legal companies here, to be honest, and they are best positioned to get you a ready token in hand as a security to distribute and put on a platform like ours for trading. The second thing, and by the way, we have 150 tokens in our supply engine, which we're currently also offering to other companies, to partners in the crypto space, basically cryptocurrency exchanges, to distribute securities on-chain on their platform under our license. So distribution is the one thing which is actually key right now, because without any distribution, successful distribution, you don't have any liquidity, you don't have any trading. Trading is nice to have all the capabilities, but we see it on our own. If you have not kind of done the distribution properly, then certainly liquidity and trading will not happen. On the other side, when we speak about the kind of everyone is building silos, which I do understand from the protocol blockchain level. I also do understand that you're going to have different platforms doing their own USB, their own setup, their own module, you know, their own client acquisition. But however, they are not speaking with each other. Therefore, we had to build actually a bridge for bridging an avalanche token into our blockchain system to get it actually available for trading purposes. But that's something which needs to happen. I'm not sure if it happens soon, if consolidation kind of supports it, but we have to have more on the interoperability between different chains and platforms. And the final thing is we built everything on chain. We do have atomic settlement for the settlement finality, doing the clearing and also doing the custody, actually self-custody or non-custodial, because in the end, if you start also looking into the CSDR, which is definitely necessary for MiFID compliant products, then we are not innovating anything. If you're going to do the same legal structure like we have today, running an order book automatically or doing the custody, we actually need to bring traditional markets, the regulation into blockchain, rather being blockchain into traditional markets. And that's actually what we are doing.
Fantastic. Tobias, Stoker was one of the early pioneers in bringing compliant digital securities to institutional investors. So from your experience, what's been the biggest hurdles, legal, operational, et cetera, in bridging that on-chain issuance with existing investor protection networks?
Yeah, right. So when we started with our idea in 2017, there was no specific law for crypto assets at all. So we were starting right in the void. But what we said at that time already, we want to comply with securities laws. We want to bring securities on blockchain, right? So we are setting from the start, okay, we will comply with European capital market rules. We will obviously setup structure which are compliant with corporate law. We are setting up most of our issuances vehicle in Luxembourg, where this is easily possible. So that was like the main challenge, actually, to know what you can do and what not. And when you think about asset tokenization, it's not only about the tokenization, like bringing like the securities on the chain, right? It's also like providing a payment layer, so you have always like a cash leg to the operation. You have to solve both problems at the same time, otherwise you not have finality and settlement in the issuance process. So there's like another regulatory hurdle then now in the space, because when you do like stablecoin transfers in the future, you definitely need a MiCA license. We will see what else you will need. But this is very essential. And what we do at Stocker with our assets, we provided like this kind of asset leg and cash leg at the same time. And of course, when you say, okay, regulation is always very beautiful, but you can make it also applicable, right? Especially in the security space, because in the end, the tokenization part is just an evolution. So on this side, we had like a lot of like successes also in the beginning. We got like approval from the BaFin for certain products. We got approval from the IMF, because when we were targeting retail investors, obviously have to comply with all the disclosure requirements of the planet, right? And then on the payment leg, right? This is very interesting, because like our investors right now, 99% of our investors on our platform paying actually with stablecoins. So without the stablecoin access and tokenization is totally useless, right? Just like for a history purpose, because like also like I know this conference was very EVM based. We started actually with Ethereum in 2018, and later on we integrated Algorand, and since 2021 we are tokenizing on Bitcoin, meaning using like Liquid is like a layer 2 solution. And it's basically based on the Bitcoin blockchain. And we see Bitcoin is actually the future financial backbone of the financial industry. We see it already happening in the US. We see it also at this conferences. People talk more and more about Bitcoin. And from our perspective, Bitcoin is also the only decentralized, really truly decentralized exchange, because it uses energy. Any other chain you're using as a financial base layer is, in our view, a little bit too risky, but of course we are always open to explore possibilities, right? Because like for the asset leg, it's not so important in the end that it's like super secure, because you have always like a snapshot of all the transactions live, right? But on the payment leg, definitely there's like a security question. One regulatory hurdle I see right now, and I think we mastered all the regulatories on the way. We are licensed by Luxembourg regulator. We will get now the MiCA license for the payment leg. The biggest challenge is bringing back big stable coins to Europe, right? Because Tether left because of regulation, because it does not fit with the business model. And here you see there's like definitely a need that the regulator will open again. Otherwise, I think Europe will just like miss the train. I don't believe that every bank is building its own stable coins that this will work. I think we have like to work with existing capital market pools and liquidity, and liquidity is right now in US. So I'm a little bit concerned about this kind of development, and I'm curious when Europe will come and say, okay, we allow also like different business model as provided in the Genius Act, as the other panel said before, right? Because in Genius Act you can also have like an underlying treasuries, right? And this is like, for example, like the business model of Tether, and that's why they left, but they will come back again hopefully soon. So we get like a lot of liquidity again, also like in the European market. Otherwise, I think people will move over the pond.
Verena, we've heard it mentioned a few times throughout the panel so far, talking about silos in one way or another. So this brings us obviously to the topic of fragmentation, and it's a challenge when you're trying to bring digital assets on chain and build the associated infrastructure. So could you elaborate a little bit about how you guys are tackling that, and specifically for your clients?
Yeah, sure. So let me maybe give a little bit of context to your question. So we started out at BNP very much as many of our counterparts by learning about the technology, trying to understand what it is about, doing testing together with our clients, identifying technical providers that can help us with their solutions, moving on to real-life experiments. And I think now it's fair to say that we understand the tech. We also have a good feeling for use cases that can bring us value, and I think that's now the crucial point to find out how we can generate scale and value around these use cases. And I think on industry level, we kind of approached it in a non-coordinated way, which is normal because it's a new space. We didn't build anything. And so everyone started a little bit individually, building up pieces of infrastructure, pieces of, like rails for digital assets and for services. And we now face the challenge that we need to find a way to interoperate among all these islands to make sense out of it. And I think there some kind of consolidation could really help. So that's not to say that we will end up with one single blockchain for all capital markets around the world. I think that's not really a realistic scenario. But maybe we will have like a dozens of blockchains gaining traction. So some that already exist may not gain this traction. Others, let's think about the SWIFT announcement only 2 weeks ago to build their own ledger. So networks that do not yet exist may gain traction in the future. I think it's not decided yet, but we will see some kind of consolidation to the benefit of the tokenized asset markets. And that also brings me to the second point on how we approach that for our clients. As a custodian, we see it as our responsibility as part of our service to enable connectivity to different DLT networks for our clients. So we need to find an agile way to connect into these networks and to enable our clients to purchase digital assets on those networks. So on BNPP's side, that's why we invested over the last couple of years major efforts in building an abstraction layer. One point of entry into the different DLT networks, which enables us to open wallets on behalf of our clients, safeguard underlying private keys, servicing digital assets as we service our clients for traditional activity today. So that's one major point we were focusing on. And on the Hennes side, this abstraction layer also ties into our existing systems, so our legacy, which is a huge part actually of the challenge we face as a traditional player. So we have our traditional stack, our legacy infrastructure, and very similar to the fact that we believe there will be several blockchains that coexist. We also think that our legacy infrastructure will remain and will need to coexist and to interoperate with DLT networks, with the digital world, let's say. And so that's a challenge, but what we actually target is to come up with one operating model for digital and traditional assets and not having a dedicated model for digital assets only, which also makes sense because we would like to propose to our clients one consolidated offer across these different asset classes.
Wonderful. You know, from my view, at least, I think what we see is this emerging ecosystem of different players in this space. You have the infrastructure, you have the protocols, you have the issuers, the settlement networks, etc., the custodians. You know, and one thing, just kind of broadening on that discussion, is this issue around standards, because a lot of these things are living on their own ecosystems, and there's still a lot of gating. So, you know, it's an open question to the panel. I'd like to get your views on that. You know, do you think, or how important do you think composability in terms of standards will be? You know, are we talking about baking these into the token layer at the protocol level? You mentioned Swift. They were doing pilots with Capgemini back in 2022 and 3. We have, Project Agora from the BIS, speaking of a unified ledger. What does all of this mean generally when we're talking about the way that standards should develop to create scale or unlock scale?
I would take it. Okay. Yeah, standard is something very important that we are looking at, in fact, when we talk about tokenization or infrastructure itself. And probably you have seen a few weeks ago, there was an announcement of a new ERC standard, the 7943, and there was a debate, long debates on LinkedIn about ERC 3643, or it's named normally the T-Rex standard, against the ERC 7943. But for me, it's not one standard against the other. The standards must live together. They must be interoperable. They must be composable. Otherwise, the infrastructure and the ecosystem will not work. And I can take an example to make it less techy, I would say. And you can compare it, in fact, to travel plans. There are people, they want to have an all-inclusive travel plan, okay? They know everything is done by one provider, okay? And there are people, they want to travel and they want to do everything on their own. And this is the comparison between ERC 3643 and ERC 7943. The ERC 3643 is the all-inclusive stuff, and it's specifically important for specific use cases, like, for example, UCITS funds. So in the traditional fund industry, the ERC 3643 is perfect. And if you are more in the RWA token private market infrastructure, then you can build with the ERC 7943 the architecture and the ecosystem that you want. You can take one module of this, you can one module of this, and they are interoperable. But both standards need also to be interoperable between themselves. It's a little bit like Swift. Swift is one standard with a lot of message types. And inside these message types, you have also two different standards, which is the MT and the MX. And depending on the use case or the infrastructure of a bank, of a financial institution, you have the MX or you have the MT. Now, the most important thing is that the standards can communicate between each other, because in traditional finance and fund industry, I have seen my whole career that asset managers moves from one asset servicer to another. It was during many years my bread and butter to move those asset managers from one to another. So if I have standards that are locked inside themselves, it will be very difficult in the future that asset managers will move from one depository bank to the other depository bank. So when I take the case of our bank, we are a depository bank and a transfer agency with 170 billion under custody. So if I have now an asset manager who is on one platform with one standard, and but he is with another depository bank and he wants to come to us, I need to take over the keys from his digital infrastructure, okay? So if the standards cannot communicate, the transfer or the migration will become a nightmare. And I can tell you that with old technology, and sorry for the Oracle guys, but it's old technology for me, it's already a nightmare. So if in case that we have different standards that cannot communicate, then it will be very difficult. So it's very important that the standards align between themselves. And I'm not talking now between standards of blockchains themselves. So here I'm just talking about Ethereum, Polygon blockchains.
Thomas, I think you wanted to pick up on that, and then maybe we'll get to Tobias or either.
I'm quick. No, Erwin, you mentioned a keyword here. It's ecosystem. And the ecosystem for securities on-chain simply doesn't exist. Securities exist for, I don't know, first stock exchange was live 1850 something. So it exists over 200 years. It doesn't exist for securities on-chain. Having said that, we are competing on the primary, on the secondary, on the custody with existing traditional financial markets who are, as you said, also functioning for 200 years. So therefore, it's even more important to have the digital cash on-chain, meaning stable coins, whether it's a Euro stable coin or to some extent USDC or British pound. But we need this digital cash on-chain, or if it's a money market fund, tokenized on-chain, even also this works as a pair for one of these security token. So in order to disrupt the securities on-chain, we really need to work on the ecosystem, make sure that it actually is from primary, secondary to custody, fully functioning.
Yeah, just a few words on the standards. I think it's also a very European discussion. Like you want to create like standards before like there is a real market, right? I always say like we are like in Europe, we always like put like the traffic lights before we invent the car. And I agree, maybe at one point of time there will be some standards developing, but I would rather see like that the market is accepting like certain solutions, right? What you see, for example, in US is like it's like very beautiful. For example, Franklin Templeton, they don't say, okay, hey, I'm tokenizing on Ethereum or something like that. No, they're tokenizing on Stellar, they're tokenizing on other blockchains. They have, I think, 7 blockchains and the like. And then you will see where is like the biggest market demand, and also like where's like the cash link coming for the specific blockchain. Because, for example, for our investors, when we have like Bitcoin yield products on our platform, right? I cannot convince like a Bitcoin maximalist to buy a ERC20 token. It's just not possible. So you have like to find also like a blockchain to a specific market need, right? As we are right now at 1.8 million, I think we are leading the market definitely in Europe. But in US, you will see, you know, nobody will talk about standards until like the market is like fully developed. And I think it's very important to consider whether you call it whatever your number you give. Important is that it actually works and it's accepted by the market and the market trusts it. And then in addition, we are talking also about blockchain. I think then we have already like a trusted infrastructure you can blindly trust, because that's like the value proposition of blockchain. Otherwise, we don't need also blockchain for asset tokenization, cash tokenization, and the like.
You know, I'd like to dig a little bit deeper into. It's a bit of a regulatory topic, but it brings us back to some of this substance over form discussion that we've been having on, for example, on DLT pilot regime. I've listened to some other panels throughout the day, and they've been discussing this. And you know, in ESMA's own opinion on the DLT pilot regime, they identified some certain areas for needs of improvement. And since a lot of you are kind of facing also that CSDR side of things, what do you think really needs to happen to bring that sort of sandboxed environment to a full production mode? Like, is it just the issuance caps? Are we talking about more so on the settlement leg as well? What is it that we really need to unlock the tokenization of real world assets at scale for equities, bonds, and securities in Europe?
Yeah, I think basically for Unit Network, for example, we have our own standards. We've got a lot of background in logistics and how logistics industry was very fragmented, and governments and customs and so on would try and use standards to actually say, get these shipments across and through to the destinations. I'd say the thing is, like, most of these standards are very similar. Yeah, China's got standards, America's got standards. They're all going to evolve, and they're going to be like, say, you got the ERC20, which is like, say, the core identity of a token. Yeah, so it's obvious. You got a person token, which is very maybe not so comfortable for a lot of people in the world. So it's probably not going to work really. Corporate is like also very difficult to manage, but people can always try. Yeah. And there are, like, say, movements, and there's a SWIFT standard that's like worked very effectively with banking transactions. But in terms of the evolution of things, I mean, basically, whatever works for you on your platform, these are the standards you can work with. And it's not that difficult, really, to say if you want to work with somebody else, then you adopt and you bridge across to their standards. So it's not like a primary challenge, really. It's just like one of those things that needs to be done to actually, say, interact with different chains. We interact with like 16 chains, and we're posting tokens across not just our chain, but other chains. And there are the standards of like bridging and so on. In terms of the specifications that we've been talking about today, I mean, it is like it's an effort that goes on forever. I've been in technology and doing these sort of things for like probably about 35 years, and really, I've seen like efforts, and it's like you've always got conflicts. I mean, China, some country or some industry leader wants to do it one way, the competitor wants to do it a different way. So it's basically not a big deal, really. It's just the semantics of things. And as long as you understand your standard with your semantics, going across to another chain, you can present that to the other chain or the other entity and like basically work with it. They'll have their standards. So this possibly answers the question. Maybe it doesn't, but I've done my best. Thank you. Yep.
I think we should have used the MiFID regime to make it a blockchain fit, because we do have a securities law, MiFID. If you're going to issue a financial instruments, we have to comply with the MiFID regulation. And this should have been done blockchain fit, because if you're going to create a token on chain, you are complying with the MiFID law. On the other hand, anything can be done on the MiFID, like the primary, like the secondary. And as said earlier, the CSDR certainly also might be to blockchain fit.
And sorry if I can maybe add just one point on regulation. So I think that we see overall really a great progress also on the regulator side. So they're up to speed on the technology. They really engaged. And I think if we take a look at the roles and responsibilities as they were defined, or rather not defined some years ago, I think we can really see the progress. And of course, it's still work going on, but it's work going on not only on regulation, also around use cases, around how we build operational models around them. And so overall, I would say, nevertheless, a quite positive trend there.
No, I fully agree, but even more important is that the regulators know what crypto means, right? And also what the blockchain can do. But we see a lot of regulatory arbitrage, especially when we speak about MiCA. And on the MiCA, we do a bug fixing right now, I see. But this is something which, at least we have the regulatory clarity, which gives us a framework, maybe too much in detail. However, I see that, and we could also see it in the other panel. It's currently bug fixing, and we have a lot of, it's bug fixing, actually.
Just quickly on you asked about the pilot regime, right? So I think like the pilot regime, the problem is with pilot regime, you obviously have like the maximum amounts. I think it's around 6 billion or something like that. And you have also like issuance limits for debt. I think it's 1 billion or something like, around this. We have like, when we're going to create like a centralized secondary market, we need a lot of liquidity, and we will see whether this is like now sufficient, because the pilot regime was definitely built to keep like innovators out and make a safe zone for incumbents. But it's also called pilot regime. So I hope that somebody considers also that's a pilot. So we will see soon like a proper law for security token exchanges in Europe, which everybody then can apply. And then I think this will just happen. We do it already. For example, we are listing with Bitfinex Security, so we're listing on decentralized exchanges. So we're making mainly use of platform outside of Europe, but we would love to see also like more players coming in. I think 21X is like the only one right now who has a little bit of a trading volume and the right license. But we hope that also other exchanges are coming into this play.
Paul?
Okay, I will close probably then with the regulation, or Paul afterwards. Do you want to say something about regulation? Otherwise, I take it now. It's regulation.
He's asking if you wanted to say something on regulation.
Okay.
He was gonna take it.
Yeah, can you hear me? Yep. Regulation is good, of course. I mean, basically, it gives us guidelines to work to. But the world is a very big place, and again, it's like very flat. So regulations are very good to, like, say, maybe bring people into line, but there's a lot of maybe, say, countries and individuals who basically circumvent these regulations. So it's important, but maybe it's not the key thing. I mean, last year there was I went to an event in New York, and it was all about whether they're going to move forward, what's going to happen to the CBDCs and so on. Suddenly we got Trump, and like the whole of America changes. Everything's open again. Yeah, there's like no more talk about this boring subject of regulation, of standards and so on. Let's get on and create something. Let's empower people to, like, say, make use of AI, make use of robotics, make use of, like, say, quantum physics and so on. The world has changed in place. It's very hard for the banking institutions and so on to keep up with all this because the juggernauts, they're actually, say, not very keen on, like, changing from legacy background. So in a way, it's, like, nice to talk about. It's nice rhetoric and so on, and it gives people, like, some comfort, really, in the world of banking. But really, when I look at, like, say, the history of banking, maybe it's time for change, and maybe there's, like, sort of opportunity for, like, say, people to be able to, like, create those regulations and to introduce, like, say, maybe a little bit more freedom, and there'll be, like, governance across the populations and so on to make sure that, like, say, bad actors are eliminated. It's just like the internet works now. In most of it should be worked this way, where there are no controls. There's a lot of controls in some countries, of course, but then, like, say, blockchain is just basically a layer on top of the internet, yeah? And basically it should just run, yeah? It should be like invisible, really, but it's just like a layer of value that actually, say, enables us to hold value, to transfer value, to assign value to objects or to businesses and so on, and to be able to, like, say, continue our business without worrying about, like, the value being double spent or whatever it might be. And it's very simple, really, yeah? Thank you.
Just very quickly, Patrick, and then I got one last question.
It's very quick. It's just to demystify a little bit MiCA, okay? Because MiCA is not a new regulation for me, okay? In the area that we are acting, in fact, we are acting under MiFID II, we are acting under AML 5.6, we are acting under DORA, we are acting under PSDR, PSD2, whatever. So MiCA is just helping me to classify, in fact, my token. That's what I'm doing with MiCA, to see if, when I have a tokenization project, I'm concerned by MiCA, or am I in the MiFID II security, and then I don't worry about MiCA. Okay? For us, as a traditional financial institution with a full banking license, MiCA is really a smart part of our regulatory burden.
Final question, maybe 30 seconds from each of you. It's almost the end of the year. We're almost into 2026. Fast forward 2029, we meet here again. What does the tokenization landscape look like? You know, are we talking about fully abstracted front ends where, you know, B2C users, for example, have no idea what the heck is behind them, but they don't care because the rails are moving? What does it look like for institutions? What are your views on that?
Well, I would say that we can compare, say, blockchain with AI. Blockchain has taken already about 15, 16, 17 years to really get to this stage, and it's not really got that far, yeah? AI, over the last 1 or 2 years, has just, like, revolutionized the way that people work, the way that people live, and it's basically got a much bigger impact. Now, when AI hits blockchain, then it's going to be like, say, 2029, we've got quantum physics and so on, but that's going to just affect the cryptography. But then what's going to happen is, like, there's going to be, like, say, invisible layers of this layer of finance, of value on the blockchain. And people aren't going to talk about blockchain, really. They don't talk about the way the internet works, for example. Don't talk about how cars work. They don't talk about, like, say, how, maybe not regulation, but things like, but yeah, it's going to be interesting. But it's about time that blockchain got a move on, really, in terms of, like, say, opening up to everybody. Yeah, thank you.
Okay. Let's meet again here in 2029, and I will answer. I have no crystal ball, so it's quite difficult, but I prefer to answer a little bit more in a philosopher way. And I want to take, as I'm also a little bit a risk manager, make a lot of risk-based approach analysis, I want to answer a little bit with the most ancient risk-based approach, which is the Socrates three thieves, the three filters. And we can apply it to tokenization. or to blockchain or digitalization in general. And the three C's are, is this thing true? Yes, it is true. Blockchain is true, tokenization is true, digitalization is true. It's no longer a hype. It's really something that will be integrated into our daily financial world. It is like it is. The second thesis is it useful? Yes, it is useful. It will completely change my value chain. I am working on this every day. So I'm completely revamping a traditional value chain with digitalization, with tokenization, and it's not a game that we are doing. We are really thinking about it. We have teams. BNP Paribas has digital asset service teams. Société Générale, all the big banks are creating those teams. So it must be useful. And then the third thesis is it good? I say yes, full stop.
In 2029, we're going to see distribution on a large scale. The second thing is that the regulators are more and more being a sparring partner for the whole space, the ecosystem, whether it's MiCA, whether it's MiFID security or cryptocurrency. And the third part is actually more about the secondary trading. I'm not sure when this is going to start, but first we need to get distribution done and make sure liquidity is coming in.
I think for me, it's like whether we will meet here in 2029 or maybe in US, right? I think there's a lot of things will happen. I believe in market forces, so I don't say which blockchain will be like the base layer. My guess it will be Bitcoin at that time, and most of the assets will be actually tokenized on the Bitcoin blockchain. But I also have like the fear that I think there's like a little bit of an over-regulation, like too much belief in regulation here in Europe. We will miss also like the big tokenization train, which is right now happening in US.
Yeah, and I think from my side, if in 2029 we would talk less and less about the tech itself and more about the actual use cases, the actual value we can bring to our clients, that would be a good thing. Ideally, our clients use blockchain as they use their phone today, so they don't care about the underlying tech. And we see it as our role as custodians to absorb the additional complexity that comes with the technology. And maybe one last word, I think if we can succeed in consolidating a little bit the fractionalized ecosystem, and if we collaborate and agree on common standards, I don't see any reason why we shouldn't move to scale.
Well, I think that brings us to the end, and I'd like to thank each of you for sharing your views, your perspectives, your opinions, and if we could please give our speakers a round of applause.